Maximus Analysis here for August 27th, 2015. We see we had a buy on close program fire off at 3 p.m. So we see that, damn, what's going on? Hold on just for a second. We have at 3 p.m. we see that they pretty much had a buy on close program that came in and pretty much shot up, and we'll see exactly how it turns out. Again, we see that the trend is still down. We are under the 200-day moving average. We also have, and they're about at 50% of this previous day, range. So they've actually closed right above it. So again, 2 to 3 days off of the rip off a low, I would be very cautious. Again, they could V-bottom it, and it seems like they've been doing. How much more do they have is more the question. But again, because of all of this overhead supply, I'm very cautious in going long. So what I'm talking about is regarding the trend versus a trade. I had some good conversation today on hotstockmarket.com, and just looking at what, again, the buy signal would not be above that midpoint that I showed, because that would mean that my stops would be below here. What that would mean is that, again, when we were up here and I said they need above 2105, that doesn't mean that I go long 2105 and put my stop underneath here. My thing is to say if they get above 2105, I would look then for a potential retracement to get to the upside. I don't trade breakouts. So same thing here. I am not going to ignore the waterfall of 1, 2, 3, 4 days of very, very bearish movement after a complete sideways move from February. I am not going to just consider this a dip. We will look at the weekly time frame and kind of say that, okay, it's setting up for a high volume candle right now that could potentially continue to the upside. But I would have to see this weekly candle close, and I would also have to see if we have additional volume to the upside more than just 1 or 2 weeks above and continuing down. So they're holding this levels currently, but again, the week is not finished. So let's look and see what this week completes, and then this might be something that for the candlestick guys would be something considered a morning star pattern if they can get above this. So we'll continue to look at how this thing plays out, but I'm not convinced yet, and we'll let them prove above these levels where they're looking to go. I'm not going to commit capital to the upside with still a lot of work to be done to get bearish. So we have NQ as well, giving you some pop up, again, volume okay right now, and they actually got to the point that I said, listen, we'll see where they're gonna, if they're gonna basically go up some more, test this 200-day moving average and continue down. The volume hasn't waned off that bad. You have the YM. YM gave a good strong close like the rest of the indexes, but now how much further are we from the 200-day moving average? So let's kind of see if we can get a price ruler or percentage ruler and say, okay, we are still about 6% from the 200-day moving average, or about the equivalent of 1,000 points. So they would have to get back up to this 17,750 area, and they're at the 16,650 area. So they still have 1,000 points to go to just get to the 200-day moving average. So let's put that in perspective as well for the ES. Okay, we need to see how far they are and how many points they get. And now remember, with a lot of these institutions, they have to sell when they're below a certain amount. So we have 78 points. That needs about 3.8% to get back to the 200-day moving average. Okay, and then now let's look at the NQ. And we can see that we also, this is probably the best one. So again, we see that we have the best one here to get above to the NQ. They're about 1% or 50 points from that. And that means that they have to get up, get above it, give a lower high. And that to say, you could say, listen, I wanted to clear all this. That's fine. You waited this long for it to break down. But now I'm just very cautious on the YM having the most percentage, the ES having the second. And again, it's same rating system that we had when we said which one was looking about 2 weeks ago, what was looking strong and what was looking So we had NQ ranked first, we had ES second, and we had the YM last. Same thing. YM has a shitload more to get to their 200-day moving average. ES has the same thing, and the NQ is actually faring up pretty much a lot better than that. So let's look at some names. Apple, this thing is still looking tired. So we again use that same type of analogy and say, okay, we have about 7% to get just to the 200-day moving average, or about 8 more points. Do they still have that into the tank with declining volume, as you see? So again, a break of that low would be interesting. We have Google. Okay, Google again popping up near this gap. Not that bad, again, but tired. We just have to see where they're going to go with this one, because what we have is we have declining buying volume, but we also have declining selling volume. But where we are, we want to see how much they retrace from this high. Let's see how much retrace from the high. You can see that, okay, they have retraced 61.8%. So 61.8%, if they break this low, which is 51.10, they could roll back over. You have a 1, 2, 3 bar pullback from some sideways action with a lot of air. Well, they filled all this gap, but we have to see again if they can break this and increase this volume. That would be something that would be bearish, but it probably more cautious type of thing. So let's look at this retracement as well. So the retracement is just at 50% of this range, and you can see that the volume needs to wake up, and they used a ton of volume to get it up this high as it is. So a break tomorrow, we could see some more downside potentials. Again, they could pop it up because they have weekly calls and weekly options that they could potentially crush, because the calls on Monday were very difficult to get, because anybody could tell you, one, they locked out retail. Thinkorswim guys, yes, you guys know, and they locked you out. Using a second thing is that the spreads were basically, there was stuff that at the money that was a zero bid $7 ask. Okay, you're gonna comment was probably the best way to go, and that's all hindsight, of course. Now we have this one popping up, and this looks actually a lot better. But again, if we see the retracement that we got going on, we can see we're above 61.8, but we want to see. I'm going to look and see if we have any strength indicators to see how strong were we from here to here. If we, again, I have other stuff that I use that I'm going to look and see what the strength looks like regarding that. We have Facebook. Again, Facebook is still in a world of hurt. We see declining volume, so I'm not going to, declining volume. So you can see that the volume is still declining. So again, a break of these lows would mean continued downside with a retracement of around 61.8%. So if it breaks below this low, which right now I would have to be, I could not say unless I'm using a higher time frame, potentially a monthly or something like that, we have to see how this candle is going to close. It would be a great candle to close if it was a weekly and continued follow through to the upside, but we have to see again how this one closes, because again, if it closes around this region here or near that 200-day moving average, that could mean some more downside potential. So we're still not out the woods yet. I'm not looking for any longs, quite honestly, because of the way I'm looking at trend. And also, just to let you guys know, there was a huge rip that I missed. I actually thought it was going to continue to the downside. Made a silly mistake today and paid for it. And also missed a fantastic move on the crude. So again, crude layered above yesterday's highs and just rolled back up. But again, looking at the trend, okay, because the trend is our friend, as weird and as corny as that shit sounds, we could see that we still have a lot of action to go. So a lot of people might say, are you looking to only get long above 51.27? If I was looking to buy this on the daily time frame, yes, I would not trade the breakout above and put the stop below here, but I would look basically for some type of price volume to break above, possibly retest or give me a retracement to my liking for more upside potential. But I'm not going to take this and then they fade it back, because on the daily time frame we're still in very, very bearish waters. We had the same conversation before, and I remember I said around 76 was where I was looking to get bullish on the on crude. And people asked why. I said, well, basically it's around here. So it was around here. I said, not that I wouldn't take some intraday longs or something like that, but based on the daily, which is how I'm basing my trend. And again, you do use the daily for your intraday trading. Again, this could come up and fade so quickly you wouldn't believe it. Again, oversold territory, but I'm not looking at this 1 day of price action on basically well, the day after the EAI report. But I'm not looking at one bar to say, okay, now the bottom is in, because the bottom could have been in here, 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 and here. Do you want to press your luck to see if the bottom is? And again, if you're long, your stop is below there. That's just not my cup of tea, and nor do I recommend that for people that aren't experienced in counter trend trading. It's a little bit more difficult and entailed, and again, it's just safer to go with the trend, which I think is down still. So again, we'll see how this thing goes. Sorry for the extra long video, and take care.